Hello and welcome to Swag Academy. In this video I will make an in-depth stock fundamental analysis of the company Tencent. I will cover its history, business model, growth, balance sheet, profitability and valuation. Tencent was founded in 1998 by Pony Ma, its current president and CEO. Its headquarters is in Shenzhen, China. The company has a $351 billion market cap. Its stock is trading around $37 at the time I'm making this video. Tencent is a Chinese multinational investment and holding company. The company has interests in music, gaming, cloud infrastructure, social media, mobile payments, e-commerce, and digital payments. In China, Tencent is like Facebook, Nintendo, Shopify, Netflix, Spotify, Slack, and PayPal rolled into one. It is also the world's largest company in the video game industry based on its investments, with Tencent Games being the subdivision of Tencent Interactive Entertainment Group focused on publishing of games. It is among the largest social media, venture capital, and investment corporations. Its service includes social networks, music, web portals, e-commerce, mobile games, internet services, payment services, smartphones, and multiplayer online games. It operates the instant messenger WeChat and owns Tencent Music. WeChat is a mobile app with voice and text messaging and a timeline. It is the most popular social mobile application in China and some overseas Chinese communities, for instance Malaysia. Tencent reports revenue in the following business segments: value-added services, online advertising, fintech and business services, and other. The value-added services segment breaks down revenue further into following categories: social network, domestic games, and international games. This business segment consists of all the social network platforms the company has to offer, which include WeChat, QQ, and Qzone, as well as music subscriptions and all of the video games the company offers. The online advertising segment includes all of the advertising income the company makes from companies that choose to advertise across Tencent's various platforms, including Weixin, WeChat, video games, mobile services, and music. The biggest driver for growth in online advertising was WeChat. Tencent Fintech and Business Services segment seeks to provide consumers with financial services, solutions, and various business services, including payment services, wealth management, cloud services, transportation solutions, and loans. WeChat Pay users can take out small loans via Tencent affiliate WeBank. The other segment refers to Tencent's investment in and production and distribution of films and television programs for third parties, copyrights, licensing, merchandise sales, and various other activities. One aspect that differentiates Tencent from other Chinese tech companies is its significant investment in other companies in China and across the globe. Tencent has stakes in over 600 companies. Did you know that Tencent owns 5% of Tesla, 12% of Snapchat, and 9% of Spotify? Tencent grew its revenue from $10 billion in 2013 to $79.5 billion in 2022, 8x in 10 years. The revenues peaked in 2021, then decreased to their current values. This is probably the reason why the stock dipped in this period. However, by checking Tencent's second quarter results for the year 2023, the revenue grew by 11% year over year. So the company is back to grow again. The same growth can be seen with the free cash flows the company generated. Tencent grew its cash flows from $3.2 billion in 2013 to $17.68 billion in 2022. The cash flows peaked in 2020, reaching $24.5 billion, then declined to their current value. Tencent generated from $79.5 billion revenue $17.68 billion in free cash flow. The free cash flow yield is 22%, meaning from every $100 Tencent sells, $22 will be returned to shareholders, making the company an amazing cash cow. Now let's check the profitability of the company. The gross profit is the result of revenue minus the direct cost to create this revenue. The gross profit margin is the result of gross profit divided by the revenue. The gray line in the chart represents the gross profit margin over the years. In 2022, the gross profit margin was 43%, a relatively high value, but to be expected for a business model like Tencent. It is noticeable that the gross profit margin is slightly decreasing over the years. It slightly decreased from 61% to 43% in 10 years. Now let's check the operating profit and the operating profit margin. Operating profit is the net income derived from a company's core operations. It is the amount of money that the company has left over after meeting its operating costs, but before paying its taxes. Tencent operating profit was $16.34 billion in 2022. The operating profit peaked in 2020 and declined to its current value. It is noticeable that the operating margin, the dark blue line in the chart, is also decreasing over the years. Now let's have a quick look at Tencent's balance sheet. Tencent has 490 billion RMB or $67 billion in current assets. The current assets are the assets that are liquid and available to the company within 1 year. They include cash and short-term investments. The total current liabilities are the liabilities which the company must pay within 1 year. Tencent total current liabilities are 348 billion RMB or $47.67 billion. Tencent total liabilities including long-term debt are 697 billion RMB or $95.25 billion. By calculating the current assets minus the current liabilities, Tencent is left with $19.3 billion cash on its balance sheet, making the balance sheet extremely strong and healthy. Tencent can use this money to buy back stocks, invest in the company, or buy another company. Now let's check the efficiency of the company, in other words, analyze the operating costs. The cost for sales and marketing increased by 5% year over year. The cost for research and development increased by 7% year over year. However, the cost for G&A, which means general and administrative costs, have decreased by 16% year over year, meaning the company has become more efficient. Now let's jump to valuations. Tencent has a 4.47 price to sales ratio, a 13.28 PE ratio, a 14.55 price to free cash flow ratio, and a 3.3 price to book ratio. Pause the video and check how the current ratios compare to the previous years. Now let's do a discounted cash flow analysis to find out the fair price and intrinsic value of the stock. This is how my model works. I calculate the worst case scenario to determine the downside, a normal case and best case scenario. The first column represents the growth rate for the next 5 years. The second column represents the growth rate for the 5 years afterward. The third column represents the terminal multiple or the PE multiple at which the stock will be sold in 10 years. The fourth column represents the discount rate or the rate of return the stock will grow over the years. Considering a conservative 10% growth the first 5 years, a 7% for the 5 years afterward, a terminal multiple of 11 and 15% discount rate. The intrinsic value of the stock is $24.3. However, if you do the same analysis and include the investment portfolio of over $150 billion, the intrinsic value of the stock is $40. The current value of the stock is $37, so it is trading below its intrinsic value. The Chinese economy is a fast-growing economy and Tencent will profit from that. However, Tencent is facing regulation risks from the Chinese government and restrictions. Since the main revenue of Tencent is from China, this is a big deal and should be taken seriously. Finally, the 3M analysis. 1M for moat, 1M for management, and 1M for margin of safety. Tencent has a strong moat. It has a huge size and network effect. Over 1.2 billion Chinese users use the app. On average, the app is used for up to 4 hours a day. The founder is the current CEO, which is something I like to see since he will have aligned goals with other shareholders. The management did a great job growing the company thus far. The company is very profitable and the management are buying stakes in other companies with this profit. The stock is trading below intrinsic value. Tencent have a healthy and strong balance sheet. In conclusion, Tencent is a great company with a great future. I currently have a decent portion of my portfolio in Tencent stock. I definitely recommend buying the stock below its intrinsic value.